So that is what's happening in the world of work, and the future of working spaces are very critical. Work flexibility. Now we want to enter into our biz chat segment, and we start off with Safaricom. Telco services provider Safaricom recorded a 34.2 billion shilling net income for the 6 months ending September 30th, representing a bounce back to profitability of 2.1%. But as Jim Bogo now reports, the forex volatility, rising interest rates, and a weakening Kenyan shilling remains a headache for the telco's leadership. On the other hand, Ethiopia's expansion continues to show great potential, outperforming Kenya in mobile data usage per customer owing to its young population.
Cost of living in the country continues to push more Kenyans into debt, with the latest number from Safaricom indicating that there has been an increase in the number of users registered for the telco's overdraft facility Fuliza. The numbers for the half year ending September 30th stood at 7.5 million returned customers, while the disbursements increased to nearly ½ trillion shillings, this coming at a time when the overall contribution of Fuliza to the company's bottom line dropped owing to lower lending rates.
If you exclude Fuliza, our financial services revenue grew double-digit. Although, even for Fuliza, the value of disbursements went up by 33% and ended at 419 billion for the half year 2024. Now, of course, this is possible because we made Fuliza affordable and also fit for solution to the market.
Now, the group, however, recorded strong growth in profitability for the 6 months to September 30th, with the Kenya business hitting double-digit growth in net income of 10.9% to stand at 41.6 billion shillings. Coming on the back of strong service revenue, which grew by 9.9% to stand at 159.1 billion shillings, while the company's cash cow M-Pesa registered positive revenue growth of 12.1% to 66.2 billion shillings.
The ecosystem continued to expand, with the total value and the volumes of M-Pesa transactions growing by 1.1% and 34.7% year-on-year, reaching 18.3 trillion Kenya shilling and 12.9 billion transactions respectively. So value increased to 18.3 trillion Kenya shilling and volumes grew to 12.9 billion transactions.
According to the telco, its Ethiopian operation has registered significant growth, boosted by an accelerated commercial momentum, including M-Pesa rollout, which has seen the company register over 1.2 million customers on the platform in less than 2 months. While on the month of September, the country's data usage also improved to stand higher than that of Kenya, having closed at 4.3 gigabytes per customer compared to 3.7 for Kenya.
We are particularly encouraged by the usage levels in mobile data. Such levels have only been realized in Kenya after 10 years of operations. On network, we have rolled out just over 2,000 sites as at the end of 30th September. This is equivalent to about a third of the network that we have in Kenya.
Safaricom, however, remains cautiously optimistic about the state of the economy, noting that it's implementing mechanism to cushion the company against forex losses, with the shilling depreciation against the US dollar remaining a key pain point for the telco. Jimmy Mbogo, KTN News.
All right, so when we see that figure, 34.2 billion, we are... Yay, that must be representing something very positive. But let's welcome Dr. Tobias Olweni. Dr. Looking at this particular performance and the concerns that have been raised, because one of the biggest issues is this issue of forex volatility. Just from the 34.2 billion figure, is it reflective of a healthy private sector in Kenya, or do you see it otherwise?
No, first, that 34.2 billion comes and you're given some statements that Safaricom actually reduced the prices of the data, reduced the prices of the M-Pesa charges, and so it's actually that made the value or the amount to rise. However, that is not very, very healthy as such, because it is eaten up by what is happening, the inflation, you talk of the interest rate, you talk of the currency, so it's not that healthy. However, it needs to be celebrated that a profit was made. It would have been bad if it was a loss.
Yeah. I mean, one of the concerns that we've seen in a lot of corporates, especially those who borrow to do business, and you happen to have borrowed in dollars, then that FX loss has been hitting a lot of these corporates. Talk to me about the way we've seen. We remember and we're coming to that discussion, Dr. Rio, of the state of the nation. You remember the time we were told, if you have any dollars, get rid of them, because now the shilling is strengthening. Now we are at 150. This issue of currency depreciation, how big a concern is it for Kenya's private sector?
It is very significant, Noah, because you see the Kenyan private sector would actually look for materials, raw materials, or even what they need for production that they will actually import, and that will actually eat up on what they are importing. That means it costs them more each and every time they import, so that they can use the raw materials. So most Kenyan corporate sector feel the heat of the currency depreciation.
Okay. Is it, because we've been seeing the Safaricom share and the way it's been performing, it's really been going down. I know there is that element of also expansion into Ethiopia. I mean, when you look at the performance of some of our blue chips, what does that say about especially the markets, as it were? How do you interpret that when you see this kind of performance and the drop in share prices? Or share prices are not necessarily an indicator of a healthy company, is it?
No, share prices speaks volume for both for the nation and also for the corporate that are listed. There's a connection between stock market growth or stock market development and the economy as a whole. So therefore, it is very critical when we see the stock market is underperforming. Of course, for most part of this year, the NSE has been very much down, and even last year and even the year before. But now it is actually made worse because of the foreign investors that are actually fleeing the market, and that's for another day. A good percentage of foreign investors have actually vacated the market, and that leaves the market in troubles, because most of the local investors do not actually have much of the drive to increase trading or vibrancy in the stock exchange. So our stock exchange is down, and therefore we expect Safaricom to perform poorly, and any other corporation that is listed.
But from the state side of things, we have seen the president being very passionate, talking about privatization, and even the law was solidified. There's been that concern. We saw that, in the recent engagement with the committee that is, comprises of former, Vice President Kalonzo Musyoka. All that. I mean, when you analyze that and you see the government saying that, privatization might bring back that vigor. Is it practical? Is there potential right there? And especially into tapping into the local investors and reduce the reliance on the, foreign investors?
A lot must be done, even as we privatize, because when you privatize and you have a lot of tax imperfections, and you are actually the people from within who actually spend more, there's been a complaint, and I know you are aware that the private sector is trying to reach out to IMF to come in between to stop some of the taxes, because it makes them less competitive. So there is a concern of how we want to do that privatization. Are we going to easen up on the other tax part so that we can actually attract local investors and also even foreign? So there is a need to really rethink in terms of what we are going to do to really increase vibrancy from the local persons in terms of privatizing.
All right. At this particular moment, we want to take a short break. But when we come back, now we go to the meat of the issue. Talk about the State of the Nation address. And I'll be picking Dr. Oluenyi's mind to tell me whether he was resonating with the president and where his leadership is taking the country. But now we take a short break. Stay tuned.